For many of you, this might be your first stock market correction or crash. So in this video, I'm going to be telling you how you can sleep well at night during a stock market crash. What's going on, you guys? My name is Daniel, and on this channel, we talk about stock market investing with a focus in growth stocks. So if that's your thing, hit that subscribe button right now. So I'm going to be giving you 4 tips as to how you can sleep well at night when the stock market is crashing. The first tip I have for you guys is to manage your risk. And what I mean by managing your risk is just looking at your portfolio and how volatile your portfolio is. Typically, when you look at the stock market and all the stocks that you can buy in there, the ones that are small caps or penny stocks, these are the most highly volatile stocks. So when they swing up, they swing big, and you can easily get a 2 to 5x in a short period of time. However, when the market's crashing, these are the stocks that usually get the hardest hit. The reason is typically these companies have just started to earn their first revenues, and oftentimes they're still losing a lot of money. And their balance sheet is not as well stocked as a higher cap company. So for this reason, investors tend to sell penny stocks as well as microcaps when the market is crashing. Another way that you can manage risk is to make sure not all of your eggs are in one basket or in a few baskets. Basically, what I'm saying here is to spread your money across different types of investments. Not only just stocks, but you can also buy bonds, and you can buy money market funds, and maybe even diversify into real estate. This way you'll see less swing in your portfolio and you can sleep a little easier at night versus seeing your portfolio crash because you're only in penny stocks. The second tip I have for you guys is to know what you're investing in. And the reason why I say this is when you're a beginner and you just start out in the stock market, everything is super exciting, and oftentimes beginners start when the stock market is going up. When you start reading forums, watching YouTube videos, reading the news, you realize there's so much potential out there and there's so many cool companies, and a lot of these companies you might invest in are penny stocks, which are doubling or even tripling every single week. But typically, the reason why you bought in is because you saw the stock already go up by 100 or 200% and figured that it could possibly happen again in the next couple of weeks. So you throw your money in there, kind of gambling, because you don't know what the business does, hoping that it doubles or triples, and then you cash out. But the problem with this is when the market tanks and you have no idea why you bought this stock other than hoping that it'll double or triple for some odd reason, then that will make you sell out at a huge loss. So for me, right now, what I'm doing is investing in businesses that I understand and I have a good grasp on why they're going to be successful in the future. The third tip I have for you guys is try to filter all the noise. Basically, what I'm saying here is to take these forums or chat rooms with a grain of salt where people are posting just random comments about the stocks going up tomorrow for no odd reason. You've got to be able to filter all that noise, because if you're a beginner investor, it's very easy to be influenced by what other people are doing. When other people are selling out and saying, I just got out and had 100% profit, I'm taking my profits now, this could also influence you to sell it tomorrow at a loss because you bought in at a lot higher level. And ultimately, this does loop back to my second point of knowing what you've invested in order to be able to filter out this noise that people are putting out there about a stock. The last tip I have for you guys here is sort of tied into the second tip, but it's to understand the future value of the stocks that you're buying. Or really, it's understanding the future value of the companies you're buying. You shouldn't be viewing these stocks as just a ticker symbol. You should actually be viewing them as a company that's producing some sort of value to the world. So if you can't understand why this company is valuable and what the value they're providing to their customers is, then you shouldn't be investing in that stock. You should be able to have a fundamental understanding of why this company will be around in the future and what is their potential worth then. If this company is a disruptive company, you have to understand how big the industry that they're disrupting is and how much of that industry they could potentially capture. And if this company is a blue chip dividend company, then you have to understand what is their economic moat such that they can still be around even though their industry is being disrupted by other companies out there. A quick method for you to assess a company is basically look at the company that you're evaluating, understand how they make their money, and also think out 5 to 10 years from now whether this company will still be needed. That's obviously a very basic analysis, but this is a lot better than most people out there who are just buying ticker symbols, hoping that they jump up like in a game of Russian roulette. So these are the 4 tips I have for you guys to help you sleep at night during the stock market correction. Now, what to do going forwards from now, because we already are in this correction, maybe you want to consider just waiting it out for this correction to end and wait till we go back to all-time highs before readjusting your portfolio. Otherwise, you could consider selling out of some of your positions, taking that as a lesson learned, and using the losses to offset some of your gains in the future. And then repositioning that money right now into an ETF or into some bonds or into some money market funds. And the reason why I would suggest doing that right now, even though it seems like a bad time to sell, at least you're selling and also buying at the same time when the market is down. Just know that you may be kicking yourself down the road if the market does recover quickly, which it's possible to happen, but no one really knows. But at the same time, I think you just have to be at peace with your decision and realize that you're doing it more for your mental health and using this as a lesson learned going forwards. If you enjoyed this video, leave a like down below, as well as subscribe and hit that notification bell if you're new here. If you guys want to know what I'm doing in the market and what my current thoughts on a day-to-day basis are, as well as want a bit of coaching here and there, then check out my Patreon group down below. I've got 2 other videos here on the screen about stocks. If you're there, I'll see you there. If not, keep up the grind and have a great day.